Good morning, everyone. I am
Mm,
Kuan Hui. My topic for today is consumer mathematics insurance. First, I would like to talk about risks and insurance coverage. What is the meaning of risks and the importance of insurance coverage? Risks. Do you know that every one of us is exposed to danger that might happen to us, our families, or our assets? Insurance. Insurance is intended to transfer risks from individual to insurance organizations. It is a contract signed between the insurance companies and the insurance owner. Under this contract, the insurance company promised to pay compensations for the loss covered in the policy in return for the premiums paid by the policyholder. And the next is life insurance. Life insurance guarantees the payments of a state amount of monetary benefits to the policies upon the death of the insured or under others circumstances specified in the contract. The risks covered by life insurance are as follows. The purpose of life insurance is provide financial protections to family members who depends on the policyholder when the policyholder dies. However, if the policyholder is alive but suffer from a total and permanent disabilities, the policyholders may receive compensations from the insurance companies in accordance with the terms sets out in his or her life insurance policy. Now, let's talk about general insurance. General insurance provides coverage against any loss or damage incurred apart from the risks covered by life insurance. There are many types of general insurance that cover a variety of risks. For example, motor insurance, fire insurance, medical and health insurance, personal accidents insurance, and travel insurance. As you know, motor insurance provides coverage against any loss or damage related to the use of a motor vehicle. A comprehensive policies provide a thorough protections compared to the other three policies. The similarities on these policies is to give a protections including the claims by the drivers and passengers such as injuries and death. And the next is fire insurance. Fire insurance provides coverage against damage caused by fires, lightnings, and explosions that occurs at home or business premise. Compensations will be paid by the insurance company to cover the policyholder financial positions subject to the sum insured. For coverage other than fires, lightnings, and explosions, policyholders may incorporate additional coverage such as hurricane, flood, riot, and others into the existing fires policies at an additional premium. Besides, medical and health insurance, such as hospitalizations and surgical insurance, critical illness insurance, disabilities income insurance, and hospital income insurance. Now, let's look at personal accidents insurance. Personal accidents insurance provide coverage in the occurrence that the policyholder suffer a bodily injuries, disabilities, or death resulting directly from accidents. This insurance is different from life insurance and medical and health insurance. And the last one is travel insurance. Travel insurance protects policyholders against losses from travels whether by land, air, or sea, such as death and permanent disability, loss of luggage, transport and money, medical expenses, and others. Now, I would like to talk about group insurance. Group insurance provides coverage to a group of individuals, typically employees in a companies or pupils in school and students in education institutions. Groups insurance for organizations financial protections is provided to employees of an organization in the event of death, disabilities, hospitalizations, and injury under certain policy and coverage limits. With this insurance, the policies employees of the companies will enjoy proper protections from their employers. Other than that, groups insurance for pupils' financial protections is provided to pupils in the event of death, paralysis, disabilities, and wheelchair allowance under certain policy and coverage limits. For example, Ministry of Education Malaysia has implemented a protection scheme for pupils of government school and government-aided school under the Tekaful Pelajar Sekolah Malaysia (TPSM) scheme. These are the examples as shown as below. So, how to calculate a premiums for life insurance? For life insurance, the amount of premiums paid depends on the chosen face value, age, genders, and smoking status. This premiums calculation is based on the premium rate schedule for every ringgit face value. Premium is equal to face value of policy over ringgit times premium rate per ringgit. Now, let's talk about how to solve the problems involving insurance. There are several provisions in the insurance contract that may cause the policyholders to receive compensation less than the actual loss and hence have to bear part of the loss. Among these provisions are deductible and co-insurance. So, what is deductibles? Deductibles is an amount that must be borne by the policyholders before they can make a claim from the insurance companies. Deductibles is commonly found in the contract of property insurance, medicals, and health insurance and motor insurance. This provision is not in the life insurance and personal liability insurance. These are the examples of insurance. Sherlins has a medical insurance policy with a deductibles of 30,000 ringgit per year with an annual limit of 300,000 ringgit. In the first years of her insured period, Sherlins had been hospitalized for appendix surgery and the treatment cost was 8,000 ringgit. In the following years, Sherlins underwent heart surgeries and treatment cost was 210,000 ringgit. State the amount borne by Sherlins and the amounts paid by the insurance company for the first and the second years of her insurance period. So, first year's treatment cost is 8,000 ringgit. This is for the treatment cost is less than the deductible amount. So, amount borne by Sherlins is 8,000 ringgit. And the second year's treatment cost 210,000 ringgit. So the treatment is more than the deductibles amount. The amount covered by Sherlins is 30,000 ringgit. Amount paid by the insurance companies is equal to 200,000 ringgit minus 30,000 ringgit, which is treatment costs minus deductibles, equal to 118,000 ringgit. Now, I would like to introduce about what is the core insurance in properties insurance. The formula is shown as above. Core insurance is the cost sharing of loss between the insurance companies and the policyholder. The policyholder is required to insure his properties at a certain amount based on the percentage of core insurance determined by the insurance companies from the insurable value of the property. If this core insurance provision is not met, the policyholder will have to bear some of the loss together with the insurance companies. Therefore, if the insurance holder wishes to recover full compensations for the partial loss incurred, he must insure the properties in accordance with his core insurance provisions. These are the steps of core insurance. First is if the insured value is equal to amount of required insurance, amount of compensations, amount of loss minus deductibles, where the amount of loss is less than the amount of insurance purchased. The second is if the insurance values amount of required insurance. These are the formula of the calculations. And the third is suffer from a total loss. The calculation is shown at right hand side. Now let's look at what is core insurance in health insurance. In health insurance contracts, core insurance is stipulated by the percentage participations cost, particularly for the major medical insurance policy. In this case, policyholders is required to bear a portion of medical costs covered by the contracts at an agreed rate after taking into account the deductibles provisions, if any. For example, 18/20 co-insurance percentage participations means that the insurance companies will pay 80% of the medical costs covered by the policy and 20% will be borne by the policyholder. So I would like to show you some guidelines to choose your best insurance. First, you must find out the total coverage needed. The second is you need to understand the scope of the coverage, the term and conditions of policies. Then you have to compare the premiums, rates, and insurance benefits. Lastly, you must avoid unnecessary coverage. That's all my presentations. Thank you.